Good evening, members. I welcome you all for the study circle meeting on the subject Growth of Global Capability Centers, opportunity for the CA specific focus on indirect tax. And to deliver upon the subject we have with us CA Kalyan Kumar K. Now I call upon Secretary of Bangalore Branch, CA Tupat Virupaksa sir, to escort the speakers onto the dais and welcome with the floor vote. Thank you, Tupat sir. Now I would like to introduce CA Kalyan Kumar K. Kalyan Kumar K is an indirect tax partner with large firm based out of Bangalore. He brings with him 19 years of experience in indirect taxes with the focus on goods and service tax and global trade. In his career span, he worked with all the big fours in India. He is specialized in technology sectors and currently focus on GCC and part of India Investment Roadmap Advisory. He is a qualified chartered accountant and company secretary apart from being a BCom graduate. Additionally, he holds a Bachelor of Law degree and he has recently completed Advanced Management program from IIM Bangalore. He is a regular speaker at the internal firm training, trade conferences and institute lead program. With this brief introduction, I present before you CA Kalyan Kumar K. Over to you, sir.
Good evening, everyone. Good evening. I thank the management committee of Bangalore branch of ICI for giving me this opportunity, and I thank all of you for being here, eagerly waiting to hear what I will talk about. As you have seen, the topic is Rise of Global Capability Centers. It's a fairly simple topic, non-technical, so all of us can just relax and spend some time to understand what is it all about. So I'm guessing most of you here are practicing chartered accountants. Anyone already supporting GCCs here from Bangalore? Okay. So, right. So fairly the larger crowd is yet to understand or get into the GCC community. Fine, thanks. So GCC, we have been hearing, this is a buzzword in the industry of late, global capability centers. More and more information in the social media about GCCs. You would hear a unit being set up in that particular city, another city, Bangalore, Pune, Hyderabad. Of late, there's been a lot of traction. So one wonders, what is this all about? And all of a sudden, it's not a new concept altogether. Why did it, become so promising in the last few years? Let's try to understand the journey, what they have been, and also get into details, what they are doing, where they are setting up, why they are setting up, and also, touch upon what are the opportunities that it will provide to chartered accountants. I, being an indirect tax domain, from the indirect tax domain, I would cover briefly or more about IDT. But there are other areas, which we will touch upon and probably hear from you to see what else can we do to GCCs. So I would request to be more interactive so that we can share our ideas and not monologue from one side. Okay, thank you. So as I said, I'm guessing most of you would know what is GCC all about. It's an offshore unit where the global entity is going to leverage the GCC for its operational efficiency or cost arbitrage, or use of certain technology which a particular location would provide for. GCC is largely across the globe is concentrated on few locations for specific reasons. India is one among them. You would have heard about other locations like Poland, Mexico, Philippines. It could be Costa Rica. There are few specific domains or areas where GCC are concentrated. Probably we'll cover in detail why India, but for these locations, it's predominantly the expertise that the local talent would bring in, and the capabilities that each location will provide, and the scale at which they have already advanced in carrying out certain functions which they house. India also has catched up over the last few years, and one of the reasons, and this slide clearly talks about why India all of a sudden, right? Thanks to COVID, the lockdown, companies not only survived but also thrived and had seen a lot of potential growth. They realized that they could get work done remotely and literally anything that they could think of. Added to that, the technology played a key role in supplementing this situation, where they realized that India has got a huge potential of talent, and the scale at which the talent is provided. We know how many engineering colleges are there, how many graduates are coming out, the expertise that it will bring in. So the availability of talent, the scale at which it can grow, right? And obviously the cost arbitrage, because of the comparatively India offers a better, relatively a smaller package compared to other locations. All these have benefited that. In the process, what companies realize is, technology is something that they could utilize to scale up. And as they realize that, technology has ventured into core processes of the company, where technology has taken a center stage, they realize that, more and more can be done remotely. And that's how they started thinking of India. And that's why you see the last 4 to 5 years, there's been a complete scale-up of GCCs in India. Added to that, India being demographically properly located, it's integrated in the value chain in the process. It has also helped them to connect with the different geographies of the world. You could take Asia Pacific or the Far East, or you could take the West. They are better placed to connect with the world, and given the facility or the opportunity that it provided, the technology, India could scale up to the requirements. And that's how the GCC model evolved. They thought that everything could be done from India, and why don't we look at advanced technology, whether it is digital, whether it is engineering services, whether it is the traditional BPM services also. So this is the summary of why everybody started looking at. Added to that, we cover how India facilitated to smooth transition of these companies and settle down in India. I pause here. Any quick questions on this?
So is it something new because we started with BPO, then KPO, then GCC? It's only the name change or the functions itself have changed?
So the functions have remained. The name hasn't changed. It's just that how the units or the centers have started functioning. Traditionally, we took up the BPO functions where it's a call center. We took up traditional functions like the finance, audit, tax, human resource. But now with the advance of technology, they are bringing this as part of their core business. Say for example, if a technology needs to be built. Earlier probably a finance function was in India, but now the technology itself is being built from India. And to facilitate that, the availability of talent, help them actually consolidate and grow. So it's not a new model as such. It's just that the GCC have evolved. They have evolved themselves given the situation and given the opportunity that India provided.
One point. I think the key change which has happened from the past, from BPO to GCC, is the in-house capability centers which they have created, which was, for example, in the past you will hear the Wipros or Cognizant or Infosys, which are mainly providing services to the other clients. But now the companies are multinational, creating their own in-house technology or the finance hub, which I see more. Not that I'm saying it was not there earlier as well, but now it is more and more. That's
absolutely. That's what I was saying. the global companies started looking at India because there is an opportunity that can provide. And once the core function itself is being carried out from India, it not only become a cost-saving, opportunity from India, but it's actually revenue generation from India. They started, whether it is customer experiences, whether it is advanced technology, whether it is product innovations, because there is a lot of opportunity and the scale and the depth at which India provided, it just shot up rampant.
You treat it as ODC, Offshore Development Center.
Yeah, it's a mix of it. Yes, one part of it is offshore development product, for technology standpoint. The larger, broader perspective is a GCC. And why do you think GCC are relevant now? Right? You can see on the slide, the number speaks for itself. There are almost 2,975 plus units in India over the last 20 years, I would say. It's been growing at almost 4.6 compounded annually for the last 5 years at least. So which means, and there's a projection that it's going to go up to almost 3,500 or 5,000 units in the next 5 years. And there's an expectation that from a $64 billion company, it will grow up to almost 100 billion by 2030. So that's the scale at which it's likely to grow. And not only the big MNCs, we have seen mid-market segment, which is also thriving in India. Mid-market is the global revenues up to $1 billion. So while the MNCs have already explored or exhausting themselves, we are seeing more and more smaller companies, setting up there. And we've been hearing, as low as 50-member, 10-member, 100-member units are being set up. Unlike in the past, where we have seen 5,000, 6,000, 10,000, 20,000 units were set up. So that's a paradigm shift that we are looking at. And they have not only become a cost center, as such, they become a portfolio hub. They're not only doing a particular domain activity or a function. They're mixing up with their various functions, whether it is finance, whether it is technology, whether it is operations, whether it is marketing, whether it is innovation. So every function is getting interlinked, and that's how they're becoming more of a portfolio hub rather than being a standalone. We've seen cases where units are set up, or MNCs who are already in India are opening up GCC, catered to certain specific areas. Obviously, we have heard that GCC are set up in the large cities, 6 cities, and especially in the last few years, we are seeing a lot of traction in Tier 2 and Tier 3. And the reason being that it's sheer presence of talents. The local talent is available. There is cost arbitrage again, that you can rely upon, and the connectivity, the infrastructure has improved over a period of time. So the connectivity itself is also is helping. So all these factors slowly moving not only from Tier 1 cities, which is Bangalore, Hyderabad, Pune, or Mumbai, we're going to smaller cities or Tier 2, Tier 3 cities like Visakhapatnam, and Cochin, Trivandrum, Bodheshwar. So all these cities are also having large GCCs that are coming up. Additionally, we were interacting with few tech heads or the unit heads. When they set up 20 years ago, there were hardly any top management residing in India. Today, there are almost 6,500 global roles that are being operated from GCCs, and it is likely to go to 30,000 is the expectation in the next few years. So the kind of opportunity that the GCCs are providing is enormous. From being a cost center, from being a revenue center and a decision maker, from innovation, from doing to actually innovating and trying to understand what else can we do. So that's the shift that we are looking at from a GCC standpoint. GCCs contribute actually 4.5, it's not 1%, 4.5% to the GDP, India GDP. And where are they actually setting up? We've heard this company setting up, that company setting up, but where are they setting up? These are the broad areas that we have seen where the GCCs are expanding. First is obviously the digital capabilities, where largely the artificial intelligence, machine learning, all this, tech savvy, which are point are being set up, whether it is innovation, data analytics, robotics, cyber security, cloud, all these are the digital areas where the companies, in fact, in the last 2 years, 60% of the GCCs are set up in the digital space. Unlike the earlier years, where largely it was BPM or non-tech capabilities, there's a shift where 60% is from the digital space. And you have the traditional engineering, research and development entities. Anyways, it's continuing, and they're also coming out with their own GCCs in the last few years. Whether it could be, enterprise resource management, it is embedded services or mechanical engineering. These are the areas where we are studying. And of course, our non-tech capabilities like the BPM, finance, IT, tax, human resource, supply chain, or any other, industry-specific areas that they would want to look at. Why India? As I talked about, in the last 4 years, there's been a lot of entities set up in India. One is availability of talent, as I mentioned. 24% of the India population, is a working population between 24 to 35, is as per the reports. So which means there is a sheer availability of talent. Added to that, the English-speaking ability, that's an added advantage, and that's why you see 60% of the GCCs that are set up in India are from the US or English-speaking geographies. There are other areas from Europe and APAC. APAC is the least. We've hardly had 5% of the GCC from APAC center. But large centers are from US-based headquarters. Of course, the availability of STEM, science, technology, engineering, and medicine. Yeah. STEM engineering. Sorry. Mathematics. Sorry. Yeah. Mathematics. So STEM population is large and large available in India. That's certain. Operational costs, there's been a study again, comparative study between all these global GCC locations, and they found out that, India cost per head, in India is relatively lower compared to the other locations. They compared with Poland, they compared with Philippines, Brazil, Mexico. They're all developed companies largely, and the cost per employee is relatively less. That is also one of the reasons why we are looking at India. Thirdly, the established ecosystem. So as I mentioned, it's not new in India. GCC has set up 20-25 years. There are large GCCs that are operating. So there is already an ecosystem, where there are suppliers, there is infrastructure, there is a connectivity, there is already set up. So it's nothing new. You do not have to worry if I have to set up. The first thing that they do, whenever we interact with the global client, is first they reach out to the connect, who have already set up in a particular location. They want to understand, what are the challenges that they face, when they set up the entity and set up a unit. What are the pros and cons of a particular, location. So they do their own study. So it's an established ecosystem, so you don't have to really worry about uncertainty. It's a certain environment where they could come in and set up, grow and expand. The last one, and these are only an indicative, there are many other reasons. The favorable government policies, we've seen both central government and state government coming out with favorable policies. Central government, you talked about it. There are policies which can facilitate any new entity coming and setting up. We have heard Finance Minister in the budget speech talk about having a national GCC framework policy, which is likely to come up in the coming months or so. There are various state governments. If you see, state governments are also coming out with a variety of policies. Karnataka itself has, if I'm not wrong, 12 to 13 policies catering to different sectors, starting from an industrial policy to technology policy to a startup policy to a SEZ policy to a AVGC policy. Now we have a GCC policy. Karnataka has been the first state to bring on with a full-fledged GCC policy, which is now followed by Gujarat. There's Uttar Pradesh, which has come out with, and there are a few other states which are coming out with a policy. So which means that there is a lot of attention also being given by state where they want to move the units to come and set up. And what are the kinds of benefits? We will just cover in that. So this is all the favorable situation for the units to come. But the units are not free from the challenges that they would face. What are the key challenges that you face? The regulatory compliance and regulatory challenges. The clarity, unlike the other developed countries where there is a clarity in terms of the regulatory and tax matters, India still need to catch up to reach to that stage where there is a clear-cut clarity on every transaction that the industry will carry out. So that is one area where there are concerns. Industry tax issues, for example, intermediaries I can talk about because it's an indirect tax topic. Have we reached a clarity on indirect tax intermediate services? Though there is a circular, there are jurisprudence that are available. Still, we have seen department going after clients, whoever they could find a closer, nomenclature to intermediary. They have been issuing notices. Of course, there has to be a standardized clarity around intermediary. Similarly, import of services. Is there a clarity on what can be taxed? There are circulars which have come out with jurisprudence. So certainty is what the global entities would look at. This is one area they are definitely apprehensive about. And once we reach to a better position, I think you will see more and more companies looking at India. The data privacy, we've seen a lot of regulations coming up in the data privacy. We're still not really there in terms of protecting data privacy. I think that is one area there will be a concern. Information is available everywhere. People are using it in the way they would want. That's one concern which they are looking at. Integration with third parties. See, when the units are coming and setting up in India, they don't want to set up lock, stock, barrel, as a completely in-source unit. They would want to focus on core areas which they want to keep it to themselves, and they outsource certain things by leveraging the expertise which the local market would provide. So there are service providers, who would cater to certain relatively low risk functions. Because of the scale and efficiency, they would rely on that. So there is a dependability, in such aspects, the third-party service providers. So there is a risk of, again, the data, information, reliability on those third-party service providers. So this is one area of concern. And of course, the talent itself. While there is huge number of graduates or talent that is available, given the niche technology that we are moving at, whether it is artificial intelligence, whether it is machine learning, are we really there to catch up to the requirement? Whether our graduates are really equipped to deliver what the companies are looking at is definitely a concern. Because it's a new area of expertise people are looking at. We are still few years behind before we catch up on getting a real expertise on those advanced technologies. So that is one area of concern which they are, definitely keeping the note of. I'll again pause here. Any quick questions from your experience? I see my friend here. Yeah.
So we have seen this transition from the BPO, initial BPO to KPO. Now the GCC is the commonly used word. So is there really a difference in what we see in the GCC, or it's an extension of this? We have seen R&D centers also in India. So with respect to government policies, government has been testing various policies with respect to BPO or KPOs. So how different it could be, and then what are the things which GCC can expect differently, or how GCC are positioning themselves than BPO and the KPO?
See, BPO and KPO again, there are traditional, functional domains. If I have to take, record keeping, if I have to take, or invoice, record to report, or procure to pay, so those traditional areas is what we have seen, in the past, where they could have used a minimal, or I would call it as more of an IT-enabled services that we have seen in the past. Now it's more of a digital, advanced technology that it is coming out of. while the GCC framework hasn't changed much, it's the way you function out of the center has definitely changed. As I mentioned a little earlier, from a cost center, we are trying to look at, reducing the cost as much as possible. The centers are now gearing up to become profit centers. How this technology is going to help their core businesses to make profits. So from a function standpoint, there's been a shift. The way they want to position themselves has definitely shifted. But the core activity in a unit which they want to carry out has not changed. They are anyway supporting the globe, they are supporting the internal organization, they are supporting multiple customers. That hasn't changed. The way they want to function, definitely there has been a standardization, there has been a digitalization, there has been an efficiency with which the centers are operating. As I mentioned again earlier, there were large headcounts. Say for example, you take accounts payable, accounts receivable, etc. Now that's everything being replaced by technology. You have a lot of tools, technologies, which if 100 people were doing the work, now it could be done by 5 people because of the advancement technology. So the way it is functioning has not changed, but the manner, the mode in which they're functioning now has definitely changed over the years. And this is going to evolve over a period of time in the coming years. Technology is going to take the center stage, and all others are going to supplement, to support this technology advancement.
Okay, in short, can we interpret that so from a low and mid-level work transition to high-level?
Absolutely, absolutely. That's why they're looking at innovation. See, earlier they were crunching data, they were massaging data, they were refining data, they are sorting data. Now, the data is still being taken care by technology, they are solution. Now, what do you do with the data is what the centers are doing. How we can innovate, how we can analyze, how we can interpret with the data, how we can benefit out of that data. For example, customer experiences. We have seen the moment we enter into a shopping mall, we get a notice, SMS saying, thanks for shopping, thanks for entering a particular, and if we log into the internet portal, if you have searched certain things, suddenly it pops up next time, and these are the areas, people generally buy, and this is what you have purchased last time. So it's all, the customer preferences have already evolved, right? Now what do we do with the data is what is centers are looking at. So it's become more at a high end, the top end, the revenue centers, and at an advanced stage. So all the traditional functions, to my mind, are going to be replaced slowly by technology. Of course, it doesn't replace the human, but technology is definitely going to take the center stage for sure in the years to come.
Sir, one point. Who gives me the name? Who calls me as a GCC? Does it require a registration with the
Okay, so it is actually coined by NASSCOM, to my understanding, right? But if you see the Karnataka Global GCC policy, there is a definition of GCC that's been come out, which is slightly different from what NASSCOM has coined. So in any of the reports that you would see as published by NASSCOM, I can name it because it's there in the public domain, whether it is whether it is NSR, in tie with NASSCOM. There are definitions in the glossary, which talks about what they would call GCC as. So that's a name that is coined by NASSCOM or the industry players, and now it is slowly coming into the policy also. We've seen, one can see the Karnataka GCC policy. There is a GCC definition that's come out with it, but slightly different, slightly expansive definition, which caters to the same meaning what NASSCOM or the industry trade players are pursuing it. Now this slide talks about certain aspects of GCC. So what is the mix of GCC in India? There is a startup, there is a units who are setting up. That is one segment of GCC that you are seeing, and you would see newspapers talking more and more about a certain company setting up the GCCs, or an existing MNC coming out with a GCC, right? For example, if I can name McDonald's, has come out with a GCC center in Hyderabad recently, right? That's there in the public domain. So McDonald's has not been new to India market. It is catering to a certain segment of customers, a different product, But now they have come out with a GCC center, which they are going to define what is that they are going to carry out from that center, right? So you're seeing a new companies coming into India, and the existing companies also setting up GCCs in India. The second one is in GCC which are already set up, like the traditional ones that we have seen. Now, though those are all in the expansion mode, they are looking at, are we doing enough? Is there something that we could tweak? We could look at our operational model. Is that something that we could redefine our center? Is what the entities are looking at. So those entities is what we are seeing. And then of course the matured, GCCs where they are not only limiting themselves to a particular domain, they are spreading across multiple, and that's where you get the hybrid, GCCs that you will get. You will have multiple functions, domains, that are being carried out from that. So what are the models adopted? One is obviously insourcing. You do by yourself everything. You don't really rely. You identify suppliers, you identify customers, or customers in the sense the overseas suppliers, where you want to do, everything is in-house. You don't really largely not depend on anyone else. The next one is the best sourcing. That's again coined by the NASCOM. Best sourcing is, what best can you do on your own, and the remaining can be supported by service providers. It's a hybrid model. It's a mix. For example, bookkeeping, if I have to take, right? My core domain activity of the center is, say, technology. I want to do an advanced automation of a process, but there is a significant bookkeeping that I need to do. I don't have to really concentrate on bookkeeping. I take the support of certain firms who can support me on the booking aspect. I can take care of the core activities that I can build technologies. So that's the best sourcing. It's a hybrid mix of your insourcing and an outsourcing. That's the best sourcing model that's fine, and that's coming out of late. And GCC as a service, So you have the entire setup, It's like the WeWork offices. You have the entire setup. You just go and work. So you have entities who have come out with this concept where they have set up end-to-end infrastructure. You just have to come, have your registrations there for the premises. You're up and running. You don't have to really take care of anything else. You concentrate on your core activity that you are, planning to carry out from the time. So these are largely the models that you see. There could be a mix and match of all this, but yes, these are what generally exist in the market.
So Zeno is such a company that you mentioned.
Sorry.
Zeno is such a company that you mentioned.
Zeno is a firm which supports entities who are coming into India. Right? They provide end-to-end service. It's my understanding. How are they setting up? The traditional way of setting up obviously is a DTA, domestic tariff area. You could set up anywhere. But given that there are central government policies, state government policies, you could like to look at setting up as an STP unit. Because if it is a software, you can always look at setting up an STP unit, and you just need a minimum space to have entry, exit. You can bond the area, and then you can be up and running. That can be your center also. Or an SEZ, where there is a designated place, you go and set up as a unit, and that is also. So, given there are tax benefits linked to it, one need to look at not only how and where you want to set up. You could look at the entire spectrum of the benefits that you would get. For example, where you want to set up. As I mentioned, there are a lot of GCC states that are coming out with policies to attract customers. Say, for example, if I have to take Karnataka itself. I'm sure most of you would have known, industrial policy has come out, and it has come out with a new industrial policy, 25 to 30. Now, one significant change that I've seen in the policy is the financial benefits, and you would know districts in Bangalore is segregated or broken down into Tier 1, Tier 2, Tier 3 under the policy perspective. Tier 1, Tier 2 is where Bangalore fits in, and there are relatively absolutely no benefits from the policy standpoint, right? But this policy, 25-23, they have broken Bangalore into two segments, Bangalore rural and Bangalore urban. If you see and read the policy carefully, there are certain limited financial incentives that are extended to Bangalore rural, right? capex incentive, 25% is what they're talking about, or 10% if I'm not wrong. Of the total capex is what they are giving as a incentive. So which is a huge shift from what we have seen under the industrial policies, right? Now, who are these Bangalore rural, all about? There are 4 districts: Hoskote, Nelmangala, Devnadi, Tulpala. And that's why you see a lot of companies coming in and around Devnadi. There is a KDB, there is a aerospace park, right? So because there are incentives that are getting extended, you will see a lot of traction, and given that this policy has come recently, you will see a lot of companies setting up around these 4 districts especially, because there are certain incentives that are extended which hitherto, to my mind, have not been there in the earlier policy. Picking up from this industrial policy, GCC policy also has given the same kind of benefits under its policy. Anyone setting up a GCC unit in the Bangalore rural would give certain benefits. I have covered it in the last slide. I'll take you through that. So which means that anyone who wants to be in and around Bangalore has got a facility to set up their unit in Bangalore rural, and if it is definitely, it's a closer distance. We have been running around the airport frequently, so it's just across the airport and you have a unit, and it's well within the connectivity and infrastructure. So that's the advantage one is looking at. Of course, the tier 2 cities connectivity is anyways there. You get the cost arbitrage, and there are larger benefits from an industrial policy standpoint. One need to read fine print to see what are the benefits to segregate between tier 1, tier 2, tier 3. There are benefits one could look at, and these policies are mutually exclusive. If you have taken a benefit from an industrial policy, you cannot take a benefit from a GCC policy, right? So one need to look at what is best for you, and what something is not covered in a specific policy. As I mentioned, there is a IT policy, there is a GCC policy, there is a AVGC policy, right? If your sector, for example, coal, right, it's not covered in any of the specific policy. You by default fall under the industrial policy, and whatever you are setting up in any of these tier 2, tier 3, or tier 1, you would get the benefits, right? So one is that aspect where you set up, and you take the benefit of these location. Added to that, capex, you have electricity duty exemption, stamp duty exemption, or reimbursement I would call. Then there is, if someone wants to set up, there is a rental reimbursement. All these financial benefits are covered in one slide to give a snapshot of what are the benefits. So that is where the location analysis comes in.
So, I have a question. That will cover gift also?
Sorry?
That will cover Gujarat?
No, I have exclusively covered Karnataka for now. While gift is one option where you could definitely look at, because there are a lot of incentives that are there. So as I mentioned, it covers under the central government policy, state government, where you could look at, analyze, and we go to the clients to bring them the differential benefits each state operates. And depending on the business requirements, they can always look at, categorize which are the cities that they will look at. Right?
Yeah, good point. So, there are GCCs which are already there in the KIDB, right? They must have taken some benefit at the time when they set up the things. So the one which you are saying about the industrial policy is about the new units which will set up, or is there a benefit extended to the one which are already there as well?
Good question. So every time a new policy comes in, they also cater to the existing units. The only requirement is you need to expand. And there are caps that are provided either as a capex, you need to meet the minimum requirements, say for example, say 1,000 crores, or you need to generate an incremental revenue. Say if you are running a 1,000 crore project today, revenue, they may say you need to have minimum 30% jump, from your existing revenue, only then you will get a benefit. So existing units also enjoy the benefits, but there are safeguards and conditions, limitations, subject to which you get the incentives. And incentives, there are percentages, 4%, 3%, depending on how you do it. And generally these are all reimbursement. So you first meet, then you file an application, and then you get a reimbursement. Right? So one need to evaluate the location analysis, what you will do, where you want to, and how you want to set up. STP, SEZ, we all know direct tax benefits have long gone. It's only the indirect tax benefits, any procurements will have a duty-free procurement. So is that what you're looking at? But if you set up as a DT unit, do you have an alternative? Yes, you have EPCG which you could explore, but EPCG caters to only limited products. Is your product covered into the list where the exemption is issued? So all this, or there is a deemed export benefit where you buy from a manufacturer in India and supply to an STP, you get a deemed export benefit. So all these options is what you need to evaluate before you recommend a client where to set up and why you need to set up there. And each state has its own pros and cons in terms of fiscal and non-fiscal benefits. Right? And in terms of the sheer number, where are they setting up? Bangalore represents 30% of the total GCCs in India. We talked about 1785. 30% is actually in Bangalore, in and around Bangalore. Or you can take Karnataka itself. 30%. And what is the reason for that? I think we started quite early. We facilitated them to come and set up. And because of these PSUs, large PSUs base, that is already there, academic institutions that are already there, research institutes that are there, I think all these facilitated, and the large engineering graduates that have come out with, all these have facilitated for Bangalore to be an early starter, and that's why you see lot and lot. But given the infrastructure challenges, whether this would continue the way it is or not is something that we would only, the time would only tell. But the soon catching up cities are Hyderabad and Pune. These are the two cities where almost every alternate GCC is being set up in these two cities. Main reason is availability of land, the benefits that are extending, and the connectivity obviously, and the talent that exists locally. So you will see these cities, and obviously the NCR, Chennai, Tier 2, Tier 3 cities, all these are. Karnataka government, you must have heard the clusters that are being created, Mysore cluster, Gulbarga cluster, Dharwad cluster, where they are creating an ecosystem. They'll say, okay, we'll build the infrastructure, you please come and set up and run. And we're going to give you a lot of benefits, whether it is stipend, whether it is access to a particular university in terms of any particular education, trainings that you would want, or a center of excellence, This is all the entire ecosystem that the Karnataka government is building for the units to come and set up. It may not be only to GCCs, it is catering to other segments also. But yes, there is a facilitation measure that the state governments are coming out with to ensure that more and more investment comes into the state. Similar to Karnataka, there are other states, popular states like Tamil Nadu, Andhra Pradesh, Telangana, Maharashtra are also doing. So whoever gets the best share is something that they are enjoying. Right? And which are the sectors that are doing? It's not only a particular sector, GCCs. They are spread across various sectors, whether it is healthcare, automobile, marketing, you call it, deep tech, transportation, logistics. Everywhere, they are setting up. It may not be specific to any. So which means that, it opens up large and large opportunities for chartered accountants for those, because our function, ours is support function which exists irrespective of the sector. Whether it is accounts, whether it is tax, whether it is bookkeeping, or accounting, every entity would need that support from us. So more and more entities into Bangalore or into Karnataka, I'm guessing most of you are practicing from here, the more and more opportunities for us to go to them, talk about our expertise, tell them what support that we can render, and then see how we can collaborate when they grow and we also grow. Yes, this is a snapshot of how governments are supporting. There are CAPEX, the Center of Excellence that are set, and incentive clinics, like one-stop destination for all your problems. Here, Karnataka ITBT department is something that is focusing on the GC. There is a specific cell in the ITBT department in Bangalore, where you can go and raise queries. In fact, I had the opportunity to interact with the director there. If you see the fine print of GCC, it wasn't clear whether Bangalore rural would enjoy the benefits. I personally had to write an email to get a clarity, because when we advise the client, we need to be very clear in terms of what benefits we get. So we wrote an email, I wrote an email to get the clarity, met them, had the discussion, and it got, and the way presented to interpret to say that this should extend to Bangalore rural, it was accepted, and they say yes, the policy is supported. There are guidelines that are going to come out soon. As we hear in the last 2 days, it's getting finalized. Hopefully in the next 15 days or so, there are going to be operational guidelines that are going to come up, which is going to guide us how to apply, where to apply, when to apply, what are the nitty-gritties around it is something that will guide us. So any questions?
So it's a practical question. So when these incentives are flowing through reimbursement, what is the on-ground challenges to get this reimbursement out?
Yeah. So we have supported few clients on the PLI scheme. A few clients. One of the practical difficulties that we get is the data, documents, right? If you see the application, the way it has been captured, you need a lot of data points, right? And it has to be backed up with the relevant documents also and the certification. So while the policy framework is there, while there is a guidance from the central government department, and similarly would be the case here, all it boils down to is, are you providing the relevant input data point? Are you giving a relevant certified information to the government to accept it, rely it, and then provide you the incentive? And that's where is the challenge what we have seen. Documentation, is something that we have. For example, if I have to talk about SVB, customs SVB, bill of entries, some offices will ask you, give me bill of entries, right? Practically it's going to be a challenge, but there is a fundamental aspect that you will get once you submit the documents, you'll get it, there is no sample. Similarly here, each document under which you are taking an incentive needs to be provided in hard copy, duly certified, and it has to be correlated into the data points. So that's the, and within the timeline, There are few companies, it's in the public domain, that few companies couldn't provide the data on time and they have lost out incentives. I think a mobile company, if I'm not wrong. They lost out on the incentives because they couldn't submit it on time to the relevant data points. So that's the biggest challenge, what we see practical. Otherwise, the policy framework is fantastic. Anyone who are meeting the requirements will definitely enjoy the benefits.
There is a substantial delay from the processing, assuming that you are able to meet all the document requirements and submitted all the things. And we know how the state governments are running. So it is a cash-starved economy everywhere across, for that matter, including Karnataka. So even the policy may remain in the books. So practically, and there is no real intention to pay it. And if that is the case, like in GST, we have some appellate mechanism. If they reject and you go for next appeal, and there is some mechanism, remedial measures. So what is the fate of this kind of, when the policy, the incentive is given through policies, whether there is appellate mechanism to support that and go and contest at the higher forum, or it is all ends with that authority?
So, to my knowledge, policies generally don't provide any reversal appellate mechanism.
That's the challenge,
right? But as a citizen, as a businessman, I always have a reversal of writ. Anything that I am not or I am deprived of, I have the writ under the constitution. That always exists. If in my case, if there is no mechanism in the policy, or if there is no facility for you to file an appeal against a particular order under that governance, as a citizen, you always have the writ option, which definitely can be explored, which definitely can give an impetus to whatever that you are trying to achieve under that. But there will be guidance. We'll have to wait. Under the Karnataka GCC policy, we'll have to wait. But from the PLI, there is a repressive mechanism where there is a intergovernment ministers where you can sit and resolve it and finally agree. What is that incentive that you're going to get? What is going to be disallowed? Because it's an incentive, you generally have those discussion dialogue before they grant it. It's not a case where like our orders which are appealable, it's not a suo motu or ex parte orders that you get. Generally they are interactive, consultative, and agreement before they finally release an incentive. Generally.
Once an application is like generally on the time frame it is able to.
Yeah, so all these are provided in the guidelines, SOPs that they're going to come out with. That will give, usually, as I said, it is afterward, aftermath that you need to file an application. So once you meet the criteria, then there is a timeline generally within say 6 months that you need to file, and you have to file before a particular department with the documents and blah blah blah, all those things, right? But generally, once you meet the criteria, is when the timeline will trigger. Usually, they will give time for sure. And given that it is the first time the implementation, if you're talking about the Karnataka GCC, there will be an extended timeline for sure, and there will be a lenience in terms of acceptance. I'm guessing, we'll have to see the fine print to see, what is the guidance all about. But usually sufficient time would be given, and there will be a lot of interaction with the industry players, consultative approach before they, and this has also been finalized after interacting with I was part of few such consultative discussions where they asked the trade and consultants to see what is that industry is looking at from the policy. Only once they get inputs is when they finalize and frame what is a policy of practice.
One question. So I hear from some of the people who are in some senior position in the government domain, they say that there's a shift from few years earlier to now is that they call the people, the consulting, the trade to help them in terms of what could the good policy look like. If compared to the past where there was a straight policy which will come out by the bureaucrats themselves, do you also see as a consultant the shift which is happening where the people from outside are being called for their feedback?
Yeah, definitely. In fact, all these consultative meetings is open to public. Anyone can come and attend unless it is a pre-registered event where you need to give your details from where you are attending and all those things. Otherwise, generally, you could attend. I have attended without any registration the Karnataka ITBT department, where you could walk in and give your. Of course, you need to tell from where you are representing, why you are here, and there will be interactions with everyone. So it's open, subject to certain sessions where there will be pre-registered requirement. Otherwise, it's more of a consultative. And because and one of the reasons why they are doing this is it's an evolving aspect, right? They're also framing policies for the first time, and they want to understand what business would look at, and they could contribute from a regulatory or a tax standpoint or an administrative standpoint, but they want to understand what the business would look at from our end, right? If you strictly write one statement under the law, if it's not going to help the business, then there's no point. And because it's an evolving aspect or area where even the industry is trying to understand, there will always be a consultative approach. Okay, now the interesting slide. What are the areas of opportunities that exist? Some of them can be traditional opportunities, that we have been doing for years. But given the way GCCs are setting up, there could be an incremental areas of support that as chartered accountants or practitioners, as a lawyers, that we can render on this. As I mentioned, when the global entity when it is trying to evaluate where to set up, they need to get complete information or the relative information to see what they are entering into. So we interact with those head offices as much as possible to tell them or to understand first, what is your operational model? What is that you want to set up? How do you want to set up? What is that niche area that you want to keep it within yourself? And what is that you want to outsource? So first trying to understand, what is your, scope with which you want to enter India, and why you're looking at in India. So that's the fundamental aspects of understanding, why. Then you could boil out into, okay, someone will say, I want to enter into this space, I want to look at only South Indian, states, I don't want to get into anywhere, can you please help me out, what are the ways that you want to set up? So they're very clear in certain aspects, and that's why I mentioned in-source, outsource, best source, right? These are the models that we will talk to them and say, these are the modes in which you can set up. So that's where you could step in, all of us can step in, strategize them, when they want to set up, how they want to scale up, where they want to set up. All this is strategy discussion that you can always have. Location analysis, as I mentioned earlier, each state government is voting the units, companies to come and set up. We can give a comparative analysis of what are the fiscal and non-fiscal benefits each one would provide. That would also help determine what is the ROI that they're going to get if they were to set up in a particular. And that's where, Karnataka tier 2, tier 3, other than Bangalore, a lot of additional incentives which the Karnataka government is providing. If they are neutral to location, if they don't want to set up in Bangalore, they are okay with, say, just taking a name, say Hubli Dharwad, right? Then you could always suggest, why don't you look at Hubli Dharwad, you could get an additional incentive. Unless they want to very particularly want to set up in Bangalore and in around, then there are limitations around the incentives that you get. So you could do a location analysis, come out with a detailed plan, what are the incentives, where you want to set up, and all those things, right? And the mode of setup, obviously, as I mentioned, STP, SCZ, DTA, what are the tax benefits associated with that? And what are the, when I say tax benefits, you could get a refund, you could get a, a concession in a particular corporate tax rate, depending on how and where you want to set up. So those are the tax support that you can always render. And the form in which you want to set up. You want to set up as a subsidiary, a branch, different ways that are available. And each one has its own tax implications around it. So you could provide, so when someone is setting up, these are the areas one you could look at. And give a holistic approach to them to say, you need to look at all these aspects before you come into India. Or when you want to expand in India from an existing setup. Tax support, I being indirect tax expert, I would obviously help them in the registrations. That's a huge aspect. Whether it is GST, whether it is IEC for customs, if at all they want to, multiple state registration, because GST is a state level registration you want to set up in multiple states, or only one state, is something that you could always help them with. Record maintenance, refund filing, right? You could actually plan, if there are a lot of capex that you would import initially, right? And you have an accumulation of credit, you can actually do a tax plan, when you want to do a application for refund. You want to go for a rebate, right? Now STPs also have got the benefit of a rebate option. So you want to go for an STP or a DTA, there are refunds and rebates options that are available, right? You want to utilize the entire credit for one application or to stagger to multiple quarter application is something that you can always provide as a tax expert, right? The other one is obviously the tax tools. All of us are hearing that many companies have come out with the tax tools. If you're building your own tax tool, that's why we'll talk about GST. Every other big consulting firm have got their tax tools, getting from invoicing, e-invoicing to keeping the data, return preparation, and then ultimately filing. And then data analytics. You also have data analytics. So if you are a tech savvy, you could always look at building your own tool, and help them come out with certain automation that you could do for your clients. That is one area of expertise. Of course, advanced pricing agreement discussion that you would always have those from a tax point. Operate model. This is one model which is just picked up in the last few years for sure. A lot of e-commerce have adopted this, where lock, stock and barrel, entire finance function, tax function, is outsourced to a firm, who can support all this, right from record to report to litigation, and then appeals, advocacy, whatever. So end-to-end function. So similarly in a GCC, you can always look at providing end-to-end operate model. You don't have to worry about your books, we will take care of it. You don't have to worry about your returns, we will take care of it. You don't have to worry about your litigation, we will take care of it. You don't have to worry about your interactions with the government officials, we will take care of it. That is one area. And largely GCCs, and third one is outbound support. Large GCCs, one is a traditional functional domain that they would cater. For example, if I talk about digital technology, right? And that's a standalone, all your cost plus is going to export, so it's a refund situation for us. There are situations where they support multi-countries from India. Say for example, if I take an example, APAC. If the unit is set up to support, again I'll take the tax function itself, to support the tax filing of APAC region, you can actually step in to help them support on the tax filings. That's the expertise, and given that it's becoming, India is getting more global, you could become expert of multi-countries. You may not be limiting yourself to a specific. We have seen few years ago, practitioners migrating to UAE, Dubai. There's a lot of opportunity that it came in, and you learn those regulations also. So now under the GCC, you can sitting out from the GCC, you can actually help them file multi-country reports. Of course, you can devise on the operating model how you want to do it, whether risk also is on you, or you want to get a sign off from the local practitioner. Those models you can always look at. This is one area where we have seen the tax heads are actually focusing on, or actually they've taken an additional role. Because after a point, any centers slightly may become redundant or stagnated, I would call it, the roles. Though they are expanding the roles from the organization to look at certain regions. Now, I have seen a few tax heads migrating from India specific to Asia specific also. Europe, or India plus Europe, India plus US. They are acquiring domain expertise of those regulations and countries. And we being practitioners, we can always support them in some form or other. They outsource it to us. We take care of their end-to-end return filing. Of course, we need to become domain experts in that way. So that's an area of opportunity that one is exploring, and big consulting firms are already exploring on that. Added to that, there are various, I'm talked about only bad. There are human resource, there is a tax provision, which would require, there is risk advisory, there is legal services that you could look at. The various aspects, depending on your area of interest, your competencies, you could always support them. It may not be limited only to your accounting or finance or tax. There are various aspects, that legal support is something that's growing, picked up in the last few years, where you support the litigation from India, draft their appeals, interact with the government, and it's all electronic. Of course, you need to have the domain expertise on that. The other areas, non-tax related, you could see reporting, financial reporting. There are many CFOs in India, or there are many practicing firms who support on multi-country reporting. Whether it is transfer pricing, whether it is accounts, the multi-country support what they are looking at. And ultimately, you can become a one-stop solution for them, end-to-end. Once a client should be a client for life. That's the thought process that one should go in. He may not consult multiple consultants, for various other aspects. If he's come to you for a small aspect, say tax, you should become his one-stop destination for every other area of function that he would need a support. That's the mindset that one need to look at. Otherwise, this is only a snapshot. There are many such areas which everyone can look at, and you provide support to the GCCs which are coming up. And how do you catch them? Is an interesting question, right? Obviously, there's a lot of effort that one need to do at each one. The various websites that are available where they do a lot of seminars, conferences, the reports that are available where they publish the names of the companies. There are paid subscriptions one can get to get the details. So there are various ways. One is LinkedIn, social media, where you could reach out to the concern. Of course, talk about your expertise. The various ways. There is no right or wrong one way of doing it, because they are new to India. Anyone who would come first to them would be interested. And of course, you need to reflect your expertise and knowledge and the depth of coverage that you're going to give. Then they would get confidence, and then once they are your client, they're client forever. That's the and of course networking. One client refers to another client. I'm sure all of you would know. And the trade conferences. One can talk about the expertise that you would bring in. You will have the leverage from the industry fraternity where they could come and teach you. So many opportunities, ways that you can tap around this. I pause here. Any questions?
Talking about the refund part, can you throw some more light as there is a difference between the normal refund process and the outbound part? Tell me something with respect to GST refund.
Yeah, so GST has two options of getting the money back from the government, right? if you are doing a zero rated invoice on your output, all your accumulated eligible credit is something that you can file 2 years from the FIRC, date of receipt of convertible formation, right? Of course, there is a limitation as a DT, you cannot take the capex credit, right? So what is the way around? You could go for a rebate. So rebate means you get the credit of the eligible capital goods, right? But on your output invoice, you need to charge GST, right? So whatever GST that you would charge on the invoice, you could offset against your credits, which covers the capital goods, which is not there in a zero rated invoice, right? And what you get back is the output that you would charge. So there could be a delta. Say for example, 100 is the tax on your output invoice. You have a credit of only 80. You paid 20 additionally in cash. What you get back is 100 from the government, right? So that's a rebate option, which was not there, or it was removed for STPI units. You used STPI in 2016, September 2016 somewhere. They brought it back just a few months ago, which is an added benefit, because what we have seen as a trend is more and more companies are exiting STPs. And my friend here can add to that also. Because there is no real incentive for them to stay in the STP as an STP, because all the direct tax benefits are gone. It's only for the indirect tax that they are looking at. There's an added compliance. There is a renewal fees that you need to do as an STP unit. So more and more, and there are alternate options that are available to procure goods. As I mentioned, EPCG, deemed export, one could look at so long as they are covered under the list. Because there are alternatives, there are limited benefits, people are exploring and coming out with the STP units. To circumvent that, they brought in the rebate option also. So they put it back so that they stay as an STP and they also enjoy the capital goods credit. Right? Added to that, given that you talked about input credit, you could always help clients in reviewing your credits, right? Whether it is immovable, we have seen, all of us have seen the Safari Retreat judgment, which overruled the earlier High Court, Orissa High Court, and then the government has amended, made retrospective effect saying that you cannot take the credit. So you could look at evaluating to the credit aspect, whether it is an immovable property, whether it is a mobile property, is it eligible, ineligible, is there a way to tax plan? Someone doing bulk procurement, you can always advise them, why don't you look at lease option? Because lease is a service. Capital goods, bulk procurement is a restricted tax, in terms of credit. Why don't you look at lease? So that's where our value addition comes into picture. How we can use the data to analyze and provide a value addition is what matters as a professionals. Right?
So just one point. The GST refund or rebate can even be claimed by units which are not STPI registered.
Yeah, of course, yes. DTA, as a DTA unit you can. Only DTA, right? Of course, SEZ is a zero rated, all your procurements are zero rated. Unless someone charges you and it gets accumulated as an SEZ unit, if they are eligible, while there are no clear provisions which can give you option to refund, there are jurisprudence which say that you can file under the others and then claim a refund. So that option always exists. While there is no clear cut guidance in terms of the formula and coverage from the rules point of view. But you have, as a DTA, you always have both options. But as a DTA, capital goods credit is anyways not available, right? So in a refund situation, that's why you go for a rebate.
So one more aspect, so as you told about the rebate part, so in SEZ area there is operational and non-operational area as well, right? Wherein the GST officer or SEZ officer don't approve the non-operational type of expenses like cafeterias. So can that also be used under the rebate?
Okay, so I think there has been a shift from operational, non-operational to authorized operations. This is section 16, which got amended to say that it is used for authorized operation. So long as you prove that something has been set up for your authorized operations, there is no nexus now that you need to prove. Used in all those aspects have gone from service tax. So long as you can justify that it is used for authorized operations, you can always take the benefit. Now there was a recent circular, if I'm not wrong, or an order which said that cafeteria expenses should not be allowed as a credit. So that's been a clear guidance. And we ourselves, wherever we believe there is a litigated area, we generally, and depending on the quantum, we highlight to them, why don't you, just leave these credits. If it is substantial, we could look at workaround to see how best we can utilize it. Right? Otherwise, if it is insignificant compared to the entire pool of credit, you would just let them go. Right? The other way to do it is, and you would know the mindset of the officer. Officer want to disallow something. You take it. You anyways know that it's going to get disallowed. You make them happy, and then that's one way of dealing with it. And it all depends on how you want to present it from an organization standpoint. Right? Organizations, some are very clear. We don't want any disallowances. We want 100% credit. So you please evaluate before you claim the credit. Some say, let's do it. Let's see, if the officer will to pick up. It depends on the mindset and the way the organization will move.
But is cafeteria or transportation is the unauthorized occupation and not covered under authorized occupation?
Yeah, transportation we talk about cabs definitely is restricted. But if it is more than 13 seater, you can take the credit. Right? And it also talks about if it is under a guidance of a law, regulation, okay, then there is a possibility of taking it. For example, midnight, someone using. So if there is a law supporting it, so for example, under the Industry Act, you have to provide end-to-end transportation, even midnight, 365, 24 hours. Then even if it is restricted, because there is exception that been thought of, you can always look at it. The other way to deal it with, there is section 17.5, which talks about restriction. If it is part of a composite supply, right? Even if it is restricted, there is an exception that's been carved out. If it is a bouquet of services where principal supplies are taxable, then you could still look at evaluating it. So those are all the tax planning options that you could always suggest the client. Right? On a standalone, yes, it is restricted. But if it becomes part of a composite, you always get that benefit of the proviso. Right? So when we review the input tax credit register, if we see standalone all this, then we try to understand, okay, was it part of any event management? What is it part of any gathering that you have incurred? Then why don't you look at going forwards, get a consolidated bill with all this, and then you could look at exploring that option.
Correct. In this block credit example, if instead of buying the vehicles, they lease it out, that would be an option.
Yeah, absolutely. See, the way capital goods have been defined is so long as you capitalize in the books, it is a capital goods, irrespective of what has been defined in the other regulation. Now, as a DTA unit, if it is a restricted credit for me under the refund option, right, then I would look at leasing, and leasing under the GST is a service, as a transfer of right to use goods is a service under the GST, and there is no restriction for leasing or a service. So you could take the benefit. So one could look at it. Again, depends on your operating model, your cash flows. Some companies they want balance sheet to be heavy. Some want to keep it light. It all depends on their operating model. And yes, that option always exists. And we did suggest certain clients to do that. For example, getting it from outside of India. Why don't you buy an outright purchase? It's your parent company, right? Why don't you get it on loan? Why don't you get it on lease? Of course, there are other regulatory implications that it would bring in, but that is option that is available. You can explore what are the implications from, say, corporate tax, income tax, transfer pricing, and indirect tax. So those are options that you can always provide.
So that means one thing is very clear, that we need to be well versed with the input credit regulations, because eventually, while let's say it is a GCC or whichever model it is registered or whichever restrictions are there, but eventually if we are clear in terms of the input credit regulation, then possibly we'll be able to advise the client.
Absolutely. I'll take an example. The carpet, which is there in every company, software company, right? Whether and what is restricted under the law is an immobile property. Okay. Now this is a leasehold improvements, right? Your partitions, all those things, all that partition. Is it an immobile property, or is it a mobile property? So that would need an analysis. We have a Supreme Court Otis judgment, under the VAT. The lifts, right? The running of the lifts, you affix it to the land, right? So there is a dispute whether it is an immobile property or a goods, right? But when you affix a product to the land only to make it function, that doesn't become an immobile property, right? An AC is fixed to the wall only to make it run. It doesn't by itself become an immobile property. That is still goods, right? Similarly, a mat that is affixed to your, I mean, it is with the gum and it is actually pasted to ensure that there is no slippery, while you walk and it doesn't move around. But that doesn't mean that it becomes an immobile property. So those kind of evaluations is definitely something that, as I said, data is there. What you do with the data is something that we as an expert need to analyze and come out with a value addition. And that's where the clients would benefit and respect us for the value addition that we provide.
For example, the 13-seater also which you gave, which is a small nuance given in input tax credit.
Absolutely.
Which is what a lot of people...
Yeah, you have tempo travelers which is typically a 12-seater or a 10-seater if I'm not wrong. You raise it to a minibus which is more than 13-seater, you are eligible for the credit. So there is more small, of course it may cost, but then again you need to do the math to see how much cost that your tax that you are losing in a cab vis-a-vis the benefit that you would get in a 13-seater and an incremental rental that you would have to pay for the 13-seater. That's a trade-off that you need to do in comparative study. And if it is beneficial on a long run, then why not? And with the volumes you can always bargain and get an efficiency in the costing also.
And these are the value adds for which the client will attach to us,
Absolutely.
for which he will value us.
Absolutely. One is compliance, that anyone is equipped and is doing. But why clients, and that's why I said once a client is a client forever, how do you do that, these value additions? Like the industrial policy that has come in, there's a small window of opportunity that it has opened by itself, saying that Bangalore rural you get a 10% capex incentive. That's first thing that you take to the client and you are expanding. I understand, why don't you look at Bangalore rural? Sorry? It is defined land, building, machinery, all these things. It covers. 10% is what is being extended. So those are the value additions definitely client would appreciate for us. And that's how you would remain as a valuable advisor to them. Yeah. And lastly, I'm covering a policy, our own policy, Karnataka policy. Many of the aspects I've already talked about it in some form or the other. This is an opportunity where if you are, and we being in Bangalore, and that's why covering the opportunity that it has come, Bangalore rural, these 4 districts is something that one could look at, advising your client to set up, to take the benefits from the policy. As I mentioned, the operational guidelines are yet to come. It's likely to come in the next 15 days or so, and once that comes in, I think it will be a clear trust. Karnataka ITBD department is guiding this. And what I have done as a snapshot, just to reflect, what are the incentives that this policy is giving. I've taken a 500 headcount as the entity which is setting up in a Bangalore rural. So what are the benefits? Fiscal benefits is what I've covered. There are other non-fiscal benefits that it definitely provides. But in terms of fiscal provide, it says rental reimbursement. So if you are setting up in that area, it could cover Tier 2, Tier 3 also. I'm not discounting that. So Tier 2, Tier 3, but I've taken this example, Bangalore rural setup for a 500 headcount. You get a reimbursement of 50% of the rent with a cap of 2 crores. So, and there's a catch. It is provided to maximum 6 GCCs. Now the policy doesn't really reflect who are those 6 GCCs. What are the criteria for selecting those GCCs? So the fine print will come in the guidelines. But yes, there is a rental reimbursement that is going to be given up to a cap of 2 crores for a maximum 6 GCCs. And it could be scale, it could be various criteria, employment generation or the viability or the niche areas that you would going to set up, those are the aspects that you may categorize and say, for these, this is the benefit that we are going to extend.
So you said 6 GCC, only 6 companies?
6 units.
So what if other companies also comply?
That's why, that's what I said, if there are 10 criteria that you need to fulfill, it's important for us to ensure that we meet the criteria and stand among the race to win those incentives.
The amounts are also not large. 2 plus 7 crore.
Yeah, 7. So all depends on the scale, that you are looking at. I mean, 7 crore is good enough to get, right? I mean, though it's a small amount for a 500, headcount, but it is because you're setting up units, better to take the benefit. Max, I would say. There could be, plus or minus, but this is the max that you could get based on my understanding and reading of the GCC policy. This is the benefit one could get. EPF contribution, is something that you could look at. Again, this is a cap of 25 GCCs annually. Again, we need to see what are the nitty-gritties around who are going to get it. Internal expenses, 25% of the expenses with a cap of 12 lakhs per year for 3 years, they're going to give a reimbursement. Power tariff, there's a 100% exemption for 5 years, right? Recruitment assessment, because you're setting up in a tier 2, tier 3, not many would really interest, if I have to call it from a Bangalore standpoint. So they're going to give incentives for that, recruitment expenses. Skilling the local talent, you want to scale up, getting a particular qualification or an area of expertise, there is an expenses that is being reimbursed from the government. And lastly, any certification expenses that you would incur as part of your operations, something. So this is the first year you're going to get 2.2, the second and the maximum number, any number of years is 5 lakhs. So total 7.5 is something 7.3, sometimes that you would maximum get under the policy. Of course, this is subject to meeting the requirements and expectations under the policy and the caps that is being captured here. Are you part of the 6 or are you part of the 25 annually is something that you need to figure out. The guidance, as I mentioned, is going to come out soon. Once that is, I think it's going to be very clear. That's all I have.
Go to one side, go on.
So I have a question. See this, most of these are in the digital services. So previously what the IT services firms were getting, now that will move to the in-house. So how do you see? Do you see like Infosys, having a declining revenue from now onwards?
This is a mode of running your unit. It doesn't really change your business plan as such. You're just consolidating everything into this and supporting the flow. It's for Infosys India or what, right? If there is a cost arbitrage that you can have by setting up a GCC in a specific location where these benefits are extended, then one could look at it. If setting up in a tier 2 city helps the company to leverage on the local talent, need not be fiscal benefit. If they are going to leverage the local talent there, then they might look at it. But it doesn't really change from a revenue standpoint, because it's all dependent on your operating model.
No, what I mean is, what are the business Infosys were getting? Now it is being done in-house by the MNC. So do you see declining revenue trend for Infosys?
No, so there is to be a new setup that they need to do. And setup has to be, if they are looking at in Karnataka, they have to set up in Bangalore rural to take the benefit, which is the closer thing for them. Or in tier 2, tier 3, cities. But if they are doing it in their existing campus, which is an electronic city, they would not get any benefits from the policy standpoint. It doesn't matter, they will continue business as
See, the businesses, they were supplying to their offshore units in US and Europe and all the things. That has moved in-house. So no more.
No, sorry, when you say in-house, what do you exactly?
In-house by GCC. The MNCs have established GCC. So
okay, their own entities you are saying, GCC.
Yeah,
Okay.
So now, do you see no business for Infosys going forward?
That I can't comment, obviously.
I can answer this question.
I think that's a point. Because I have worked in shared service centers, I have formed teams and all that. That's a valid point. We will not name one company, but yes, since if I am a Unilever or a PNG or something, I am setting up my shop here. A lot of Indian companies who used to do these services, provide these services from India to abroad.
It is definitely going to impact, because the business is moving, obviously it is going to impact. But what is that incremental, niche area that you are going to support is what defines you. You need to redefine yourself. You need to remodel your operating model. Then you can again supporting the clients. But the same service is moved to a GCC by the overseas entity. Obviously, it's going to affect in some form or the other.
But just to answer your question, so what is happening is the companies like Infosys or Wipro, they are also evolving. They are also trying to go into the niche area the way he rightly explained. So they also have a business development team who always found out new areas where they can impact. For example, the companies who are creating the in-house capabilities, so they are starting first with the cost arbitrage in their mind, right? Now, with that, let's say they start with the finance or let's say the tax or etc., but then they are still kind of into the niche area of the AI, which is where the companies like Infosys and Cognizant will work. So it's about the evolution. So if you don't change yourself with respect to the needs of the time, then you will vanish any which way. So I think they have the business development team who works very strongly into these kind of areas, which is for Accenture as well. Yeah.
Right. Any questions? I'm done with my presentation. I've covered what minimum information that I could provide. There's a lot of information that is available. We can go on, to cover those areas. But this is the basic minimum information that ought to have covered. So I've covered only that much. There's many information that is still available in the reports, public domain, in the news articles, which we can always gather and see how best we can use the information to our advantage and support the clients. Right? Okay, thanks. Thank you.
Hello. Good evening all. I would like to thank the speaker CA Kalyan Kumar K for taking us through the topic growth of global capability centers, opportunities for CAs, specific focus on indirect tax. It was such a wonderful session. I hope all the members liked it. As a token of appreciation and gratitude, I would like to call upon our chairman, Mr. Manjunath, for giving a token of appreciation and a memento. Thank you so much. So we'll be waiting for the next session for next Wednesday.